We're in stage 5. That's not opinion, that's pattern recognition. And if history repeats, and it always does, you have 18 months from right now until the bottom. 18 months from stage 5 to complete collapse. That's how long it took in 1929. From the moment the smart money saw the crack to the moment the Dow lost 89% of its value. 18 months. And we can map every single month because the pattern never changes. September 1929, stage 5 began. The market was at all-time highs. Everyone believed it would last forever. Insiders were quietly selling. Margin debt had reached 8% of GDP. Valuations had detached completely from earnings. The mathematics guaranteed what came next. October 1929, the crack, the first liquidation wave. November through December, false hope and dead cat bounces. January through June 1930, the slow grind down. July through December 1930, accelerating collapse. January through March 1931, capitulation. By March 1931, 18 months after stage 5 began, the Dow had fallen from 381 to 160, a 58% decline. But that wasn't the bottom. The bottom came 2 years later at 41, an 89% total loss. But the 18-month mark is when most of the damage happens, when fortunes are destroyed, when the middle class gets wiped out. Right now, in November 2025, we're at the same stage 5 moments September 1929 was. The indicators are identical. Insider selling at record levels. Margin debt approaching 8% of GDP. Warren Buffett sitting on $325 billion in cash. Valuations that make no fundamental sense. The smart money has exited. And that means we're starting the same 18-month countdown. If the pattern holds, and the pattern always holds, we're looking at May 2027 as the 18-month mark. The moment when most wealth will have transferred from those forced to sell to those positioned to buy. I'm going to show you exactly what happened month by month from September 1929 to March 1931. Then I'm going to overlay that timeline on 2025 to 2027, show you what to watch for each month. When the selling accelerates, when the false hope appears, when the real capitulation hits, and most importantly, when you need to act if you're going to survive this. Because the crash isn't one day. It's not Black Tuesday and then it's over. It's 18 months of systematic wealth destruction. And right now, the clock just started. September 3rd, 1929, the Dow Jones Industrial Average closes at 381.17. It's all-time high, a level it won't reach again for 25 years. At this moment, almost nobody sees what's coming. The newspapers are bullish. Investment advisors are telling clients to buy more. Irving Fisher, the most respected economist in America, is giving speeches about the permanently high plateau. But a few people see it. Joseph Kennedy, one of the most successful speculators of the decade, is liquidating his positions. He understands the mathematics of margin debt. When everyone owns stocks on 10% margin, a 10% decline wipes out their equity. When their equity is gone, brokers liquidate. When brokers liquidate, prices fall further. It becomes self-reinforcing. And once it starts, nothing stops it until all the leverage is purged. Bernard Baruch is also out. He's converted to cash and government bonds by September. He's seen bubbles before. 1907, earlier panics. He knows the signs. The manic conversation, the religious certainty, the dismissal of any skepticism. It's always the same before it collapses. European money is fleeing. British banks have been quietly selling American stocks since August. They've seen this before. The South Sea Bubble in 1720, railway mania in the 1840s. They know that when valuations detach from fundamentals completely, when speculation becomes universal, that's the most dangerous moment. Corporate insiders are selling in massive quantities, not diversification, systematic liquidation. Executives and directors who know their companies better than anyone are unloading 50%, 60%, 70% of their holdings. Because they know the stock prices don't match the reality of their businesses. They know the earnings don't justify the multiples. They're cashing out while retail investors are still buying the dream. And here's the critical detail almost nobody notices. Corporate earnings peaked in the second quarter of 1929. By September, they're declining. Factory orders are falling. Industrial production is down. Commodity prices are weakening. The real economy is already rolling over, but stock prices keep climbing, completely disconnected. This divergence is the signature of stage 5, when prices rise purely on belief, on momentum, on the assumption that what went up will keep going up. This is where we are right now in November 2025. The Dow and S&P at or near all-time highs. Warren Buffett with $325 billion in cash, more than he's ever held. Corporate insiders selling at levels not seen since 2007. Right before the last crash, margin debt approaching record levels as percentage of GDP. Corporate earnings showing signs of weakness. The exact same pattern, the exact same stage. September 1929 was stage 5. November 2025 is stage 5. And what came next in 1929 tells us exactly what comes next now.